Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're going to be talking about Bbig stock, obviously, but we're also going to be talking about naked short selling and some of the loopholes there are so that big market makers and hedge funds can naked short sell and collude together. And yesterday we went over how they're hiding short interest in these deep in the money put options. Well, we're going to be talking about the other side of that put option, which is the selling of the put option, and how those people who are selling the put options to the buyers are actually hedging their put position. So it's going to be a very interesting video, and it's also going to be talking about the derivatives market, options market, and how all this really is just a messed up system that is against the retail trader, and it's going to get a little confusing. So my confusing warning is going up here right now, but I do ask that you do try to stick with me throughout this video because I'm going to try to explain it in the simplest terms possible so that anyone can understand this. And with that being said, let's just get right into the chart. So as you guys can see here, we have Vinco Ventures 1-day candles chart, and you can see there's increasing volume on the daily. We've had 5 consecutive green days in a row, and the MACD is now converging into an uptrend. So everything looks great in terms of the uptrend that we're seeing in Bbig stock right now. However, we have had 5 consecutive up days, green days in Bbig, so I would not be surprised if there is a small pullback in the upcoming week, especially if the Tide dividend does create additional selling pressure. And if you guys did want to check out this charting software, I'm going to leave the promotion on the screen right now. It's WeBull desktop. It's an amazing charting software where you can do technical analysis on all these different stocks and cryptocurrencies. You can even trade and buy Shiba Inu on their platform. Currently they're giving away up to $300 if you just download the app and make an account, and they're giving away additional $2,000 if you deposit any amount of money on their platform. So the promotion ends at the end of October, so act quickly and let's get right back into the video. So I actually posted this on Twitter, and I'm going to be doing live updates as well on Bbig stock throughout the week this week, so you should definitely follow me on Twitter. It's Hootmoney YT, and I did give you guys a little sneak peek of what this video was going to be about today, so definitely check out that Twitter if you guys have not already. So we're going to be talking about the derivatives market and how it has a big impact on the price of an underlying security. So for reference, Bbig Vinco Ventures is currently at a market capitalization of $800 million USD, and as you guys can see on the screen here, we have several different market caps. So right down here you can barely see it. It's gold's market cap, which is about $7.8 trillion. Now the actual market cap I believe is above $10 billion now, so this could be an outdated picture, but you'll still get a general idea of my point just by looking at this chart. So the stock market has a market cap of about 77 trillion, physical money 43 trillion, all the money in the world 95 trillion, global debt 184 trillion. And it's kind of funny how the global debt is 2 times as large as all the money in the world. I mean, that just shows red flags in terms of economics right there. Real estate is 217 trillion in market cap, and then we have the Goliath that is the derivatives market, which is $532 trillion. And the derivatives market is essentially a market that uses underlying values from all of these economies and puts it into a derivative, which is basically priced on a different asset. So this would include stock options, which we have been talking about, also stock futures, commodity futures, as well as credit default swaps and tons of other derivative assets. So with derivatives being such a large number, there's so much leverage and things going on behind the scenes that we just don't know about, and literally what seems to be fake money that is occurring within this derivatives market. So people do predict that the derivatives market is going to eventually collapse, and it'll have huge impacts on all economies around the world. So I'm going to be going over options today, which is a derivative of an underlying stock. So you have heard about options in Bbig before. So 2 different strategies there are to manage risk in options are covered calls and covered puts. You've probably heard of a covered call. A covered call is when you sell someone else the right to purchase a stock that you already own, which is why it is covered. So if you sell a call option on Bbig and you own 100 shares of the stock, you are essentially selling a covered call, and if that option gets exercised to buy those 100 shares, you already have those 100 shares to deliver to the call option buyer. Well, there is also this thing called a covered put, And this is where it gets very, very interesting, because if you do sell a put option, you can technically hedge that put option by being short 100 shares of the stock. So an example of a covered put would be selling short 1,000 shares of XYZ at 72 and then selling 10 XYZ April 70 puts. And by doing this, you will become delta neutral, because if the underlying stock goes down, the put would start to increase in value, but you've also shorted those 100 shares of stock, so you're also getting money if the stock goes down, and you are covered in that position. So in yesterday's video, I was talking about how short sellers hide short interest in these deep in the money put options. So you'll see a lot of these 24 strike price puts as well as these 20 strike price puts. Well, there's an other side to this trade, and it's called the put sellers, which is technically a bullish strategy. But if you're selling short 1,000 shares in order to hedge against these put options, is it really a bullish strategy? So this brings me into the next point, and now we're going to Investopedia, the truth about naked short selling, and we're going to scroll down right here, and we're going to read this paragraph right here. I've zoomed in on it so you guys can see it yourself, and it states, these short sales, and they're referring to naked short sales, are almost always done only by options market makers. They allegedly need to do so naked short sale, in order to maintain liquidity in the options market. These options market makers are often brokers or large hedge funds who abuse the options market maker exemption. So what if there was an options market maker as well as a hedge fund that wanted to buy put options in a stock, but there was no liquidity for that stock? Well, here you guys can see that Citadel Advisors bought put options in August. They might be buying put options now and they haven't disclosed it yet. And they're also a market maker. And then again, these naked short sales are almost always done by options market makers that are either large hedge funds that abuse the exemption. So there's a very good possibility that Citadel, the market maker, is selling these put options to Citadel, the hedge fund, and hedging those put options that they sold as a market maker with naked short sales, because there is an exemption rule to provide liquidity in the options market. If this doesn't make sense, I totally get it. So when selling a put option, you can either hedge by having cash to buy the shares on hand from that put option, or you can do what I said earlier. You can short sell a stock and remain delta neutral on that put option. So if an options market maker is writing these put options, they could have short sold a stock in BBIG in order to remain delta neutral and take away the risk. Now we all know that there are 0 shares available to be shorted for BBIG. So the only way for a market maker to remain delta neutral when selling these put options is by naked short selling a stock and then later buying back that stock on the open market. And again, guys, it gets really fishy when a hedge fund like Citadel buys put options, but then Citadel, the market maker, writes these put options. What would be the point of selling them and buying them? And I believe it's because they are allowed to naked short sell in order to hedge against selling these put options. And the reason being is because BBIG is not currently on this regulation SHO threshold list, because if they were, I believe the market maker would not be allowed to hedge in this fashion. And as you guys can see, BBIG is not on this list, but I do expect them to be on this list very, very shortly. So there actually was an amendment to this market maker rule, basically banning this rule. But I do believe that they're only banned from this rule if they're on the threshold securities list, which is why I just brought that up. And essentially the reason that they made these amendments is because they believed that market makers were abusing this rule, and it resulted in way too much of an excess of failure to delivers in the stock, and they just believed that it was unfair. There were multiple reports of people saying that market makers were abusing this rule in 2008. But when reading this amendment, I discovered that this might only apply to securities that are currently on this list, which BBIG is not currently on this list. So we're just going to read through it real quick, and then I'll explain my thoughts on it. So after careful consideration of the comments, these were the comments saying how market makers were abusing this rule. We are adopting amendments amendments to eliminate the options market maker exception to regulation SHO's closeout requirement. Specifically, as a result of the amendments, all fails to deliver in a threshold security resulting from short sales by a registered options market maker affected to establish or maintain a hedge on option purchases established before the security became a threshold will, like all other fails to deliver in threshold securities, have to be closed out in accordance with the closeout requirements of regulation SHO. So essentially, if I'm reading and understanding this correctly, they only eliminated the options market maker exception rule to threshold securities, meaning that the amendment only applies to securities that are on this list. So in my opinion, there's a very good chance that a large amount of these puts that were sold are currently being hedged by naked short sales. So what I believe that Citadel is currently doing is the market maker Citadel is writing these put options, or they're selling these put options to the hedge fund Citadel, who is buying these put options because they want the exposure to the downside of BBIG. Meanwhile, the market maker Citadel, who is writing these put options or selling these put options to the hedge fund Citadel, is hedging their short put position by naked shorting BBIG stock. And the only reason that they're allowed to do this is because BBIG is not currently on the regulation SHO threshold list. And the only other way that these put sellers actually could be selling these puts is if they post collateral in cash to buy the stock if this put option gets exercised, which it's just so much that I just don't think it's possible. I mean, that's billions of dollars of cash right here that would get exercised. So obviously this whole theory is new to me and I'm going to be looking into it a lot deeper, but if I am interpreting this correctly, then all of those puts that were sold are likely hedged by naked short sells if the market maker decided to hedge in that fashion, as it's not a SHO threshold security. I'm going to obviously keep looking into this, but this just shows how the derivatives market can completely manipulate a stock price once again. Clearly, market makers take advantage of their fiduciary duties in the marketplace, which is why the amendment to that rule came in effect in the first place, because market makers were taking advantage of it. There's multiple anecdotes of evidence, so if there's still a loophole to it, why wouldn't they take advantage of it now? Especially if market maker hedge funds such as Citadel have a short position on the stock. It's a lot to wrap your head around, and I don't expect everyone that's watching this video to understand what's going on, but I just wanted to get this out there anyways because I do think it is valuable information. And again, it's happening in AMC, it's happening in GameStop, it's happening in all of these different stocks currently. And I hate to end it there because I feel like I could talk about this for hours on end, but that's about it for the video. I hope you guys have enjoyed. Leave a like on the video if you guys learned something today. Subscribe to the channel if you're new and hit those post notifications down below so you never miss a beat here on this channel. Also, follow me on Twitter, Hootmoney YT. I'll throw it up on the screen right here. And that's about it for the video. I hope you guys have enjoyed. If you guys wanted to check out that charting software that I used at the beginning of the video, there'll be a link in the description or in the pinned comment section. And they're doing that promotion, $300 if you open an account, another $2,000 if you deposit any amount of money on the platform. That's about it, guys. Hope you guys enjoy, and I'll see you guys at Market Open tomorrow. Join the Discord server and have a nice day. Peace.